All right, welcome to this deep dive. We've got your stack of sources right here, some articles hitting on major recent movements and developments in the digital asset world. And yeah, we're ready to rip into them.
That's right. Think of this as your shortcut, really, to being totally in the know on these pieces. Our mission: pull out the absolute most interesting nuggets, the surprising facts, and, understand the so what behind them.
Exactly. And the sources cover some fascinating ground. There's news about a token you might not expect, suddenly becoming a giant in futures trading.
Hmm.
Then there's a major country exploring Bitcoin for its national reserves. I mean, at a really high level.
Yeah, quite significant.
And finally, a project trying to inject decentralized finance DeFi into a super popular messaging platform.
It's a snapshot, isn't it? It shows how quickly things are moving on multiple fronts. You've got trading infrastructure, national policy, consumer adoption, all happening at once.
Okay, let's unpack this first piece of news from the sources. It really grabbed my attention because it's about a token that's suddenly making huge waves in the futures market. Maybe one you haven't heard shouted about lately.
And that token is HYPE. It's the native token of Hyperliquid.
So here's the core surprising fact the sources reveal. HYPE is now the fifth largest digital asset by futures open interest.
Yeah.
And get this, it's actually surpassed Dogecoin.
That's a pretty significant flipping. In terms of where leveraged bets are being placed, the data shows the dollar value of HYPE futures open interest sitting at, what, $2.06 billion?
Wow.
The source does note it's still behind XRP futures, but yeah, ahead of Dogecoin's roughly $1.83 billion. That's quite something.
So for anyone who hasn't been following Hyperliquid, what is it exactly, according to the sources?
Well, it's described as a leading decentralized perpetual exchange. A perpetual exchange basically lets you trade futures contracts that don't have an expiry date.
Right.
And decentralized means it operates without a central intermediary. Hyperliquid is actually built on its own Layer 1 blockchain. Think of a Layer 1 as the foundational network itself.
And the activity numbers are just wild. The sources point to data showing that last week alone, Hyperliquid handled 60% of the total on-chain perpetuals trading volume.
60%.
That volume was $94.3 billion.
60% of all on-chain perpetuals volume is, yeah, it's massive. It really highlights its dominance in that specific niche right now.
So why is HYPE itself getting so much traction? What do the sources say?
Well, it's used for a few key things: economic incentives on the platform for paying fees, and also for decentralized governance, letting holders have a say.
Right, utility is key. And there's a detail from Hyperliquid Hub's X post, cited in one of the sources, that really stands out about the tokenomics.
Oh, yeah. What's
It
all
says
that?
97% of the protocol's trading fees are used to buy back HYPE right off the open market.
97%. Wow.
Yeah, the post even quantifies it. 92.78% of protocol hypercore revenue goes to buying back HYPE on the open market over $1 annually in buybacks.
Okay, so that creates just a consistent, significant buying pressure that's tied directly to the platform's success. That makes sense.
And the market performance totally reflects this. HYPE's price has, quadrupled in just 3 months.
Right. And this rally coincides perfectly with that explosion in open interest we mentioned and these super high positive annualized funding rates.
Ah, yes, the funding rates. When they're high and positive, like the sources mentioned, HYPEs were, I think, over 100% at one point.
Yeah, that's what it said.
That essentially means traders holding long positions are paying traders holding short positions. It's usually a strong signal of, overwhelming bullish demand for leveraged longs.
So putting it all together, what does this surge in HYPE futures really tell us? Why is this specific corner attracting so much leverage capital right now?
This is where it gets really interesting, I think. It suggests that these decentralized trading platforms, especially ones with genuinely strong tokenomics, tied directly to platform usage and revenue, they aren't just theoretical concepts anymore.
Right. They're becoming real players.
Exactly. They're becoming incredibly efficient, high-volume markets that are, maturing rapidly. And they're attracting sophisticated trading capital, even surpassing more well-known tokens in certain metrics like open interest. It shows a specific evolution happening within the ecosystem.
Definitely a space to watch. All right, let's shift gears dramatically now, moving from the specifics of market mechanics to something more on a national scale. The next piece in your sources is about a major country exploring Bitcoin integration at the highest levels.
This news centers around Pakistan. Apparently, they're having high-level discussions about potentially bringing Bitcoin into an economic framework.
That's right. The sources detail a meeting involving Michael Saylor, executive chairman of MicroStrategy.
Yeah, the big Bitcoin guy.
Exactly. He sat down with Pakistan's finance minister, Mohammad Aurangzeb, and also the Minister of State for Crypto and Blockchain, Bilal bin Saqib.
Wow, okay. That level of engagement is significant. So what was the focus of their talks, according to the reports?
It was about positioning Bitcoin as a sovereign-grade asset, exploring its potential role in Pakistan's sovereign reserves and their long-term financial strategy. The goal discussed was essentially bolstering monetary resilience.
Sovereign-grade asset, that's a powerful framing.
It is. And Michael Saylor's perspective on this, as relayed in the sources, is quite bullish for countries considering this path. He reportedly praised Pakistan's openness to innovation and called Bitcoin the strongest asset for long-term national resilience. He even suggested countries like Pakistan have a unique chance to leap ahead in the financial landscape by considering Bitcoin strategically.
Interesting. And Pakistan's own ambition, what do the sources say about that?
It's bold. They apparently aim to become a leader in digital asset adoption across the global south, specifically looking to attract institutional investment and set a regulatory benchmark for emerging markets.
Ambitious goals.
Very. The sources also provide context on Saylor's own experience, right? Noting his transformation of MicroStrategy into this massive corporate Bitcoin holder.
Yeah, they hold a staggering amount. What was it?
Around 582,000 BTC, valued over $62 billion. And this strategy has clearly benefited MicroStrategy's market cap significantly since, 2020.
No kidding. And did the Pakistani minister respond to that?
Yeah, Minister Saqib's statement reportedly echoed that ambition. He suggested Pakistan has the talent and determination to replicate that kind of transformative success, but on a national scale.
Okay. This raises a really important question for you, the listener. What are the broader implications if more nations start doing this? Particularly, say, in the global south, countries looking for financial resilience or ways to leapfrog traditional systems.
Right. What happens if they start seriously viewing and maybe even using Bitcoin as a strategic reserve asset?
Exactly. This isn't just market speculation anymore. It's potentially about reshaping national economic strategies. Could really change the game.
Okay, let's wrap up with the final piece in your sources. This one looks at how digital assets might get integrated into platforms you probably use every single day.
Yeah, this is about a protocol built on the Open Network, or TON. It's called Affluent.
And their goal, as described in the sources, is pretty straightforward, but like you said, ambitious. They want to turn the messaging platform Telegram into a full-fledged financial super app.
A super app specifically focused on decentralized finance, DeFi.
Exactly. The sources explain that Affluent is a TON-based money market protocol. So think of a money market protocol as a system that lets users lend and borrow digital assets directly, often earning yield or taking out loans, that kind of thing. And this protocol will be accessible directly as a mini app inside Telegram. They're calling it a smart bank for crypto, offering things like lending pools and yield-generating strategies.
A smart bank for crypto, inside Telegram. And who's behind this?
Well, the people involved have serious roots in the space. The sources mention co-founders, including Justin Human, who was formerly a director at the TON Foundation.
Oh, okay.
And Hyung Lee, who co-founded a DeFi research and development project called Bee Harvest, so people who know the tech.
Right, and their stated aim.
Pretty clear. To make Telegram a financial super app using crypto to provide everyday savings to retail users and sticky liquidity for institutions. So targeting both everyday people and bigger players.
The sources do a good job explaining the super app idea too, right?
Yeah.
Using examples like Grab or Uber or maybe WeChat in China.
Exactly. Platforms that bundle multiple services, messaging, payments, food delivery, loans, whatever, all into one seamless application.
So the motivation here seems pretty obvious. DeFi today can have, let's say a complex or clunky user experience for newcomers.
Definitely. It can be intimidating.
So by integrating these services into a platform users are already comfortable with, like Telegram, the hope is to dramatically lower that barrier to entry. Makes sense.
Yeah. And it's interesting context the sources provide on Telegram and TON's history, too. Remember, Telegram initially walked away from developing TON years ago due to regulatory hurdles?
Yeah.
But the sources note that Telegram formally endorsed TON as its preferred blockchain for Web3 infrastructure just last September. So the relationship is now explicitly supportive again.
Okay, so connecting this back to you, our listener, if lending, borrowing, earning yield on digital assets becomes as easy as just opening a mini app inside a messaging platform you already use daily, how might that fundamentally change how mainstream users interact with and adopt digital finance.
What's fascinating here is the very real potential for finally bridging that notorious gap, right, between the complex, sometimes code-heavy world of crypto tech
Yeah.
and the smooth, intuitive experience everyday users just expect from their apps now. It could unlock significant adoption simply by meeting users where they already are.
So what does this all mean when we kind of pull back and look at the big picture? We've taken a deep dive into three distinct, but I think clearly interconnected stories from your sources.
Yeah, we had the surprising rise of HYPE futures, showing maturity in decentralized trading.
Then Pakistan's high-level talks, potentially positioning Bitcoin as a sovereign asset.
And finally, this protocol aiming to bring DeFi to the masses via Telegram.
These examples really underscore how dynamic and multifaceted the digital asset space is right now. We're seeing simultaneous advancements in like sophisticated market infrastructure, discussions at the national strategic level,
Right.
and efforts to improve consumer access and user experience, all at the same time.
And as you can see, bringing these different threads together from your sources gives us a far richer understanding than just focusing on one headline in isolation, doesn't it?
Absolutely. So to leave you with a thought to ponder, building on all this, consider how the growing interest from major entities like nations and this push for mass market accessibility through platforms like Telegram. How might that interact with the increasingly sophisticated high-velocity trading environments we see emerging, like on Hyperliquid?
That's a great question. How might the influx of potentially millions of new users and maybe new types of institutional capital shape the very nature, maybe even the volatility of these advanced markets and the future landscape of digital assets?
Something to think about.